$10,000 in 1928, left alone, through wars, crashes, pandemics. Today, $72 million. The market always wins. Always. Two people, $100,000 each. 2008. One panicked. Sold at the bottom. One did nothing. By 2012, $340,000 difference. One decision. Crashes don't destroy wealth. Panic does. This video shows you exactly what to do when markets fall, and why the crash might be the best thing that happens to you. September 2008. Lehman Brothers collapses. Largest bankruptcy in U.S. history. $600 billion gone overnight. Markets open Monday. Everyone sells. Everything. Market drops 50% over 17 months. $100,000 portfolio becomes $50,000. CNBC. Economic collapse incoming. Reddit. Sell everything now. Your neighbor. I pulled out last week. Noise was deafening. Most people listened to it. The patient investors did nothing. No selling. No moving to cash. Just watch the number drop. $100,000, $80,000, $60,000, $50,000. Painful. Yes. But they had a plan. Hold. Always hold. 2009. Market turns. Nobody announced it. No bell. No signal. Just quietly started going up. Plus 26% that year. Panic sellers missed every point of it. Still waiting for the right time to get back in. Final 2008 scoreboard. Panic seller. Locked in $50,000 loss. Patient investor. $190,000 by 2012. $140,000 difference. From doing nothing. February 19, 2020. Market at all-time high. 33 days later, down 35%. Fastest crash in history. Faster than 1929. Faster than 2008. Nobody saw it coming. March 2020. Peak panic. Record ETF selling. This time is different. Economy will never recover. COVID changes everything forever. Headlines screamed collapse. Investors who sold locked in minus 35%. Forever. Recovery. 5 months. Fastest recovery in history too. August 2020. New all-time high. $10,000 invested March 23rd. Worst day. By December 2021, $21,000. Plus 110% in 21 months. The crash was the opportunity. Final 2020 scoreboard. Sold at bottom. $6,500. Missed everything. Held. $21,000. Plus 21 months of growth. Bought more at bottom. $31,000. Same crash. 3 completely different outcomes. Your reaction was the variable. Apple drops from $180 to $108. Same company. Same products. Same Tim Cook. Same iPhone. Do you panic sell your iPhone? Or do you buy two? Stocks are the same thing. You're buying businesses, not numbers. Price versus value. 2 completely different things. 2008. McDonald's stock dropped 60%. McDonald's sold 6.5 million burgers that day. Same as the day before. Price was in panic. Business was fine. That gap is where wealth is built. Every single crash in 100 years. Bigger recovery than the drop. 1929, minus 86%. Then plus 1,000%. 2000, minus 49%. Then plus 400%. 2008, minus 50%. Then plus 400%. 2020, minus 35%. Then plus 110%. Pattern is not random. Pattern is the market. One more number. Miss the 10 best days in 20 years, your returns cut in half. Most of those best days happened right after the worst days. Sold during crash? You missed the recovery spike. Timing the market costs you more than the crash itself. Dollar cost averaging. 3 words that remove emotion from investing. $500 every month, no matter what. Market up, you buy. Market down, you buy more. You stop thinking. System takes over. This single habit beats 90% of professional fund managers. Watch what DCA does during 2008. January, $500. Market normal. 5 shares at $100. June, $500. Market down 30%. 7 shares at $71. December, $500. Market down 50%. 10 shares at $50. Same $500. More shares each drop. When market recovers to $100, those cheap shares are worth double. Averaging down, you own 10 shares at $100. Crash hits. Price drops to $60. You buy 10 more at $60. Average cost now, $80. Market only needs to recover to $80, not $100. Crash cut your break-even by 20%. A DCA versus lump sum during 2008. Person A, $6,000 lump sum January 2008. Person B, $500 every month through 2008. 2012. Person B has more shares. More shares. Less average cost. Systematic beats emotional. Every time. Your brain is wired to lose money. Danger detected, flee. Evolutionally perfect. Financially catastrophic. The same instinct that saved ancestors from tigers destroys portfolios in crashes. Media makes it worse. Fear sells clicks. During every crash, 94% of headlines negative. Recovery happens anyway. CNBC doesn't profit from your calm. They profit from your panic. Turn it off. What billionaires do during crashes. Buffett 2008. Buying. Be fearful when others are greedy. Be greedy when others are fearful. Buffett bought $5 billion Goldman Sachs during the crisis. Result, $3.7 billion profit. They buy when you sell. 3 questions before selling. 1. Did the business disappear? 2. Did my investment thesis change? 3. Do I need this money today? If 3 no's, hold. 3 questions replace emotion. Write them down. Use them next crash. What to do before the next crash? It's coming. Unknown when? 1 month? 1 year? 5 years? Doesn't matter. Preparation beats reaction. Every time. Before crash checklist. Emergency fund, 3 months expenses in cash. DCA, automated monthly, non-negotiable. Debt, no high-interest debt. Timeline, 10 plus years minimum. If all 4 crashes can't hurt you, they can only help you. During the crash, 1 rule, check portfolio once a month, maximum, not daily, not hourly. Studies show investors who check daily make 4 times more emotional trades, 4 times more mistakes. Ignorance is profit here. After the crash, 3 steps. 1. Don't check if you already recovered. 2. Keep DCA unchanged. 3. Don't brag that you bought the dip. Next crash, do it again. That's the entire strategy. Boring, consistent, wealthy. 3 types of investors. Every crash reveals which one you are. Type 1, sells, locks in loss forever. Type 2, holds, recovers with market. Type 3, buys more, accelerates wealth. You decide which type you are. Right now, not during the crash. The next crash is coming. History guarantees it. What history also guarantees, full recovery. Every time. $10,000 held through every crash since 2000, through 2001, through 2008, through 2020. Today, $54,000. Held through everything. Did nothing. Won everything. 2 investors. 2008. Both start $10,000. Panic seller. Still waiting for right time. Has $8,400 in cash. Eaten by inflation. Patient investor. $54,000 today. $45,600 difference. From one decision. Made in one moment of fear. Fear is the most expensive emotion. You now know what 95% of investors don't. Crashes are temporary. Losses from panic are permanent. DCA removes emotion. Preparation removes fear. Next video. What a stock actually is. What you own when you buy Apple. How businesses become your income. Subscribe. The best video in this series is the next one.